Thank you so much for tuning to another episode of the Financial Griot, aka TFG. We're here. We love to share our stories, our perspective on money building, gaining a better perspective on community building, but also bringing on guests along the way so we can share their stories as well. I'm one of three of the co-hosts, Alainta, Alcin, and today I have Lawrence, who just burst with so much energy today. We'll talk about that later. But yeah, it's going to be a great episode because we have an amazing guest that I'm very eager to share his story with you all. And I know you guys are going to love it. But before we jump into that, Lawrence, how are you doing?
I'm doing amazing. I think this has been a blast of a day, a great semester, or not even a semi-annual season where the stock market is doing fairly well. We're going to a bull market. People are really turning around into confidence. And I love to have guests on here, especially because they're going to share their stories about how they've made it out of making a way out of no way, those ideas. So if anybody doesn't know me, my name is Lawrence Delva Gonzalez. I am the neighborhood finance guy who actually reps the neighborhood Spider-Man. That's where I actually got my name from. I really love bringing the same type of content and energy and spirit into what we do because we want to help the little man. Everybody on the streets figuring out how to understand their current banking situation, investment situation, tax situation, or even wealth building is what we do. And it's why I love to have Jonathan on here. And he's gonna, break it down. But I did watch a whole lot of your videos, the contents on IG where we
do our research.
Hey, we do it. We gotta do what we do. And it's I always love the juxtaposing like one ideal versus the other. And I do appreciate the way he respectfully somehow manages to correct or even add a little bit more to the conversation when it comes to a topic, especially as a lot of financial literacy has come on social media. So without further ado, I'll pass it back to you, Alainta, because that's how it goes. See, I'm being positive.
I know. I was going to say, woosah. Okay, that was a good pause. Yeah, that was a good pause. I like it. I'm like, okay, we're gonna do this very.
As soon as he said IG, I was like, oh Lord.
How do you pull it together? Pull it together.
Yeah, we have Mr. Jonathan Thomas on with us. He is actually I know you through FinCon. We all know you through FinCon and being some of these financial literacy spaces, especially Black content creators. Yeah, share your story. Like, who are you? Where are you representing? And why have you become so transparent when it comes to money conversations?
Oh, thank you. Thank you guys for allowing me to come share the space with you. It's so much fun to talk about money. I come from St. Louis, but I I live in Charlotte now. I started off in banking, and like I share with most people, I mean, I got a realization after graduating with my bachelor's, but I was in my beginning my master's program, and I was looking for a job, obviously, in my career field. And the young lady I was dating, she worked for Wells Fargo at the time. She had already graduated. I didn't know at the time, but she had graduated with her MBA debt free. But we were talking, I had an issue where I needed some tires. And so we're dating. She was like, so what are you going to do? And in my head, I'm like, well, I'm about to ask my mom, because I don't have the money. She was like, well, don't you have the money in your savings account? So that was a question, or in today's context for her, it would have been a red flag, number one. Then number two, I said no. And she was like, well, just put it on your credit card. Didn't have one of those. So he was like, okay, so what are you typically doing? I was like, well, I'm going to get it from my mom. The end result of that particular conversation, he actually helped me with the tires because that was a little underlying issue with it. That's why I brought it up. But she also helped me steer me into the way of taking my talents to banking because I wasn't having much luck in the job search. And I started off at Bank of America. And the first thing I did was I was thinking about the savings and credit conversation she was having. So I spent the first 30 days just talking to high financial advisors, low financial advisors, small business people, mortgage people, to really understand pretty much the whole banking system. I did that for my job, but I also did that for myself. And so through that, I learned how to really help work with people in the bank to essentially help them qualify for more products and services, but build up their savings in the process. And then from that, 30, 60 days, I got really good at teaching my peers. So I rose to leadership very, very quickly because I could turn a branch around to profitable. I could get people get more products and services that they needed. But it was really more the impact of that information to the consumer that really changed everything. And so taking that leadership over 13 branches in Bank of America to Wells Fargo, when I transferred to Charlotte for a little bit, and then I landed in a credit union in 2016 after I graduated my MBA, and that's where I kind of learned that community aspect of the service. And so with that, I was really, really empowered to understand, especially because I was now leading and understanding the underwriting aspect of things for credit cards, car loans, and just how this thing works. And I'm like, well, we're missing it because so many times I have people, just on regular people on the street that are, I mean, unbanked. They're not understanding fully what their options are, no matter how bad their situation is. Like there is a banking solution that can help you that will be less than if you went to some payday loan lender or anything of that nature. So that's really what helped me start and motivated me because I was posting things online and friends at home were saying, yeah, I see your tips. I'm like, yeah, you're not engaging, you're not commenting, you're not liking or anything. But the Facebook group born out of that. And then from that, it was just a way for me to touch people a little bit closer. To now, it's really grown with me as I've been licensed to do mortgages, understand the underwrite. The only thing I haven't touched in leadership is I haven't led financial advisors because I don't have my series and small business, but I still understand the products and services in that. But the whole purpose is what I've realized, especially as I've grown my wealth, is people really don't know what options are available to them. They think they have no options. And then the second piece is you might listen to a podcast like this one who says, hey, do this and save $1,000 in a week, or do this and you can get your car free or what have you. But the problem is after they get through listening to the podcast, there's a decision that has to be made the next day at their home that just throws that whole plan out of whack. And they don't understand the multitude of decisions that it takes to get to these things.
Yeah, absolutely. There's so many things to unpack in there, but I would say is first thing is I have a similar story about not car breaking down, like the tire issue. And I remember hearing on, I don't know if it was the Steve Harvey or the Tom Joyner morning show. I don't know if people know those shows, but anyways, listening about saving and forgetting. Like, I wasn't making that much. I was in college and I used to put $25, right, into my savings. And, half of the time you're not thinking about is automation, right? So when my tire broke down, and I realized my saving account, I had $100. I'm like, okay, I see what's going on. So that kind of prompt me to kind of remember, just save. So you never know the unexpected things that happen. So you also mentioned that in this, relationship that you had in college, this person brought to your attention about, hey, do you have a savings? Do you have a credit card? Like what are the options that you do have, and it start to, I guess, realize to you like, hey, I don't have much options. It's very limited options that I do have. And we do talk about this a lot on this podcast, even amongst my friends. What you don't know is really what you don't know, and it costs you. You know what I mean? And I think sometimes too, when we're putting ourselves in these positions of not knowing or not being exposed to these information resources, we kind of draw back and retract and make really erratic decisions and things that we may not be accustomed to making. But that's really good and amazing too, that you have someone in your circle in your life to kind of expose you to that and get into the banking and finance. Did you start off at Wells Fargo like just a bank rep?
So yeah, at Bank of America, I started off as a personal banker and went through their assistant manager program. And then this with the shifted how the bank was moving and just natural economy of things, I ended up branch manager and rose up to consumer market manager very quickly just because my branch performed. But yeah, that was a for me a game changer because like I said, St. Louis, it's the show me state. So being able to like I said, financial advisors, because they have different levels based off how much money the person has. So being able to see number one that these people actually had that money was a game changer for me. And then second, I could actually see, okay, this is what they were actually putting their money in as far as stocks and investment. And it lines up with a lot of the books and a lot of podcasts. And I realized for me, that's privy because I worked in the bank. Everybody walking around the street doesn't have that privilege to see that information. So how do I translate that to the average person walking down the street? And I realized it's extremely difficult because I was my approach was always, hey, you can be a millionaire because I see it and I believe that. But for somebody who like is living paycheck to paycheck, who they're getting it out the mud every day and they're trying to make it, they're making 40, 50,000. The big win for me, like your point, is when I was able to first save that first $1,000. Because when I first saved $1,000, that's when my mind was like, well, if I got 1,000, can I get to 5? And then when I got to 5, I'm like, oh, can I get to 10? Because 10 was just mind blowing. I'm like, who has $10,000 cash? And so once I got there, I realized, oh, this is an actual process. And that's kind of what I was sharing with Lauren thing. I'm like, the millionaire thing, it was like in hindsight, but it wasn't until my investment started to grow, the things I started to get to where I started to accumulate, like, oh, it's really not that hard to get to $1 million. But it's the process that you have to grow through, like in maturity, because you don't know what it's like to have $1,000. You don't know what it's like to get a $500 bill and like, oh, it's not that big of a deal. You know what I mean? So it is a big deal for somebody who don't have it. Like I was that guy. So that's the thing.
And it's funny enough, too, because you worked at both Bank of America and Wells Fargo, and as you know, there's a lot of mishaps and experiences. People of color, just a lot of people in the Black community have experience with both bank institutions. What is your perspective on that, working with both banking institutions? Because a lot of Black people are scared of these institutions. We had someone in the past, we were talking about Bank of America. Was it Bank of America? It was one of these banks.
It was Bank of America.
It was Bank of America.
Housing thing.
Yeah, a housing thing. And I kind of gave my 2 cents in it because I have a Bank of America loan and they gave me actual grants because I was a first time homeowner. And coming into the situation, my loan officer, who was very open with me, told me all the information that I needed. I was very reluctant because of all the things I heard of Bank of America being sued and all these like overdraft fees and all these constant things. You know, their social network right now is not looking that great, right? But I do understand that you can't always go into these situations as a victim, right? Where you have to kind of leverage yourself and kind of see like what is the best opportunity for me to kind of leverage myself and put myself in a better position. So what has been your experience with that when you're saying that you work for Bank of America or Wells and Fargo? Because the perception right now in the Black community with both bank institutions is not great.
Right. And so, I mean, to add another one, so Bank of America, Wells Fargo, and then most recently USAA. And the credit union. So we all, I mean, anybody who knows USAA is like they're a great company, but I mean, you know the demographic that's there. But Bank of America, I use that a lot just because I grew up with Bank of America. My mom, that was my first bank account. But the thing about Bank of America is, like I tell anybody very boldly, I lost an account with them. I lost a credit card with them, and I would not have gotten that account back had I not went back to work with them. Or went to work with them to begin with. My manager overrode that whole thing to get me a bank account with them. So I was not even in their I worked there and I produced for them, but technically I couldn't get an account there. So until obviously my boss. But the thing that I think people miss with these institutions is you have to use the institution. Every bank, financial institution is good for a particular section of finances. So, and for a particular person. So if you're making $60,000, $70,000 or average income, whatever the average income in America at whatever time is, you got your direct deposit, you're fairly stable in your job. Having your checking account in a bank is not going to be terrible for you, and they give you a lot of additional resources to assist. But when I tell people get a loan from them or even have your investments with them, no, because they're not going to, from a loan standpoint, they're not going to give you the best terms. And from an investment standpoint, working there at Bank of America, they were going through the countrywide scandal where they took on all these bad mortgages. And so the one thing that has been proven is the banks, they end up doing well. So like Bank of America right now is number 2 as far as financial institutions, and they've grown to that. But your situation has to dictate whether or not they're going to be a good bank for you in terms of a mortgage. I can tell you right now, in terms of a credit card, in terms of a personal loan, that's probably the average person. That's not going to be your best bet. Your best bet is probably to go to a credit union. But in terms of a mortgage, you can probably have some negotiability there. But I'm always going to probably tell somebody to be like, hey, what I would tell you to do is go to a smaller lender, something that's on a Costco platform or a Zillow platform. They're going to help you with your buying. If you're not in a program, if you're just out there about to buy, you go through that platform, you're going to get low fees, you're going to get the best rate. And eventually, if you truly just want your mortgage at a bank, well, guess what? That smaller mortgage company, they're doing the deal for you up front, but likely in about 6 months after that, it'll be bought by a big bank, and that's who you'll be with. But as far as are they stable? Yeah, they're stable. In this time, look where everybody's trying to put their money in: the stable institution, the large institution. If you have the money, if you have the resources, so they're not bad because I use Wells for my bills. Bank of America, I'm one of their premier clients now, which is weird because I'm also the same guy that y'all didn't want to give a credit card to, y'all didn't want to give a checking account to, and y'all offer me all this stuff. But when I go for my investments, I'm at a Fidelity, a Charles Schwab, Vanguard, because they know how to really take care of you at any level. And I'm talking about take care of not just in your fees, but hey, your situation is changing. You need to think about some of these tax planning tips. We need to get you with this resource to begin before something happens. Bank of America, you're not going to be able to access the full stock market like you would like. And that makes things difficult when you're trying to do different things with your investment.
Yeah, I'll jump in there and say as well, like I'm also a person that has Bank of America, but I also bank with Navy Federal Credit Union, and it's just a combination. The reason I use Bank of America because I think somebody dropped the quote that it's on every corner, like like at any corner at any given time. It was a really, I guess, in poor taste. Now social media won't be is too happy with it, but it's on every corner and on every block. So anytime I go to any city, I always have a Bank of America. So therefore, I'm not withdrawing from like to incur that fee. So there is an opportunity there. I think people just need to start looking at banks as not just convenience, but also what can you do for me in that scenario? You got to shop around. So for example, I do have Bank of America just for like regular checking here and there. Just pop up. They don't give me any fees. And then I'm one of their premier clients, whatever that is, gold tier, something like that. I don't know what I'm getting.
You get an extra 5 cents on that savings account.
That bank savings account is 0.01%, but I'm a gold tier member out here. So, but at the same time, I have my mortgage with Navy Fed because I felt like they gave me a decent deal. And I also have investments in Fidelity or M1, so on and so forth. So you don't have to kind of stick with just one thing. You could shop around. And I think I do want to go back and peel back the idea of the unbanked statement that you brought up earlier. I know a lot of people don't know what that means. And I think it's very important, especially when payday loans are charging upwards to 780% on their interest. It's really bad. So I don't know if do you know all the details about the unbanked, or go ahead.
So with the unbanked population, and you'll definitely have to check me on it, but it's probably somewhere around 7 million people are unbanked or underbanked. But unbanked basically means when a person gets their check, they're going to a Walmart, they're going to a convenience store. They're not participating at all in any product or service in what we call our banking system. So they don't have a checking account anywhere. They don't have a savings account. Even if they're carrying, what was the thing on BT, the rush card.
Rush card out here.
You know what I mean? Those are
I had one, so stop.
Okay.
When I was in college,
you had a rush card?
It was purple. No, I had a regular bank and I had a rush card. It was nice. Shut up.
It was purple. It was just because it was purple. We got problems.
Okay.
But let's keep going.
Yeah. So the thing about that is, if with the assets I have, if I was unbanked, it's going to cost you, because it's going to cost you a lot. But the thing is, you're talking about a person upwards of, if their check is $600, they may be paying 10%, close to 10%, 8 to 10%. That's past their check every time they get paid. So automatically you're starting off in a deficit than somebody who has their check going to a bank. And that's the reason why I said you could simply just went to a credit union. You could have somebody neighbor. You don't travel a lot. You can access your money. Do they have every single up-to-date feature? They're getting better. They have most. It's not as bad as it was. But when you're talking about your ability to participate, your ability, if I have a check that comes in, I can get a little bit better access the longer I bank.
Oh, you can even scan the checks on your phone.
Yeah, so they have some of the same features. It's just not like from an online banking, like Bank of America's online platform is the best in the nation. So a credit union, it's as good, but I would say if Bank of America is I would say a credit union, typical credit union is probably like a B-. It's not that much of a difference, because truth be told, you're probably not even going to use all the tools that's in there. So the thing about being unbanked is, to your point, more what I think is education. Because if I run into all them people and they come in, or they only come in a bank, or they only come in a credit union because they're like, oh, your name was on the check, I'm gonna cash it here. They don't realize, oh, I can have an account here, at least at a credit union, and I don't have to go through all these problems as often. I can mobile deposit my check. I can do it. I have to learn how to do things appropriately, so I don't I have to learn the responsibility of a check. But a credit union, for somebody that doesn't know anything, you even may make some hiccups in the forms of overdraft fees, or you might bring a bad check or something of that nature, and they'll do their best to mitigate, but you don't lose everything just off that first instant. It really takes a trend for them to be like, nah, we're going to kick you back, because their whole mission, again, is to help you. And to your earlier point, the problem, a higher level way of seeing this is, anytime you're dealing with money with anybody, this is a financial relationship. And any financial relationship is a give and take. So if I'm just giving you a check, but to the average person, you won't give me a credit card, you won't help me finance my home, I'm in a jam, I can't get a personal loan, I'm starting a business, you won't give me a business account. Well, how beneficial is that relationship to you? They're getting the benefit of your money every month, but you're not able to use things that can help you move your life forward. That's what you have to approach every situation with. But yeah, the unbanked and underbanked, there's typically the lower income neighborhoods. They're typically the neighborhoods that have a lot of payday lenders on the corner, have a lot of car title places, those type of, that area is typically hugely unbanked.
I just want to add too, because when we're talking about unbankable people, I just want to put it more simplest term, more low income. So when you think about this, when you're opening a bank account at one of these big institutions, you have to meet a certain income requirement, right? And most times they do require you to do direct deposits, so it can waive the fee of the checking account. Well, I'm sorry, waive the fee of establishing that account that you have, i.e., checking account, saving account that you have. So they'll waive that. If you're in the lower tier of that income bracket, right, you don't meet that requirement to even have a bank with them, because majority of money is being taken out because of fees, right? So you can't establish that. Another part of that, living here in Florida, is a lot of immigrants, right? If you don't have a social security number, you can't have a bank. You can't open a bank account. So many people here, a lot of immigrants here, they save their money, with a friend or on the mattress per se, that whole notion with that. But they're very susceptible when it comes to robbery, because a lot of people here knows they carry cash a lot, right? And they don't have a place like the Navy Federal Credit Union because they don't have a social security number or the documentation to prove their residence, or they have a work permit, because it's illegal. So there's like different components of being unbankable, but it's very prone and is very predatory when it comes, and you become vulnerable when you're in these situations where you don't have a bank. You're unable to go to these places to put your money, your cash. You're making money, you're making income legitimately, but you don't have a place. So now you're more susceptible when you are being robbed or something is happening. And then if you're illegal, many illegals here in Florida, they don't even report these things that happen to them because they're illegal, because they're afraid of getting deported. So there are many nuances to this of being unbankable, and I think it's far exceeds money when you think about it. But it's one of the things that we have to kind of consider. If you are a U.S. citizen or resident here, you have to kind of create these spaces and opportunity for yourself so you do not become susceptible to these. So that was a great point that you made.
Yeah, I mean, I remember seeing them, and I mean, the cheat code for that one back in the day was they were signing people up for EIN numbers and putting them in business bank accounts when
Yeah,
they
yeah.
didn't have it. The long term effect of that is, of course, the tax code. So the business has to be taxed, and while they can get by with deposit if they're a painter or a lot of the laborer type work. They're putting their money in the account, they're putting it cash, and they have a debit card, and they can even get a credit card off the business. But the challenge comes when you want to get something large, when you want to get a car, when you want to get a home. And the problem with that is, in your tax returns, at the end of the day, you're going to have to show a profit, and that profit, and you're going to have to pay tax on that. And that's where, from an income perspective, your business can't buy your house. You have to buy your house, and so you're going to run into that scenario. So yeah, it really is really disheartening, but it is something that, again, a lot of people, they just don't know. They know as far as what's around the corner. Oh, Raheem or whoever is running whatever store, they'll cash my check for me, but the credit union will do the same thing if you have a social. It's a lot easier if you have a social, if you have a valid address to at least get you going. You know what I mean? So those two things pertinent. You can go get a credit union account, no fees. There, I haven't seen a credit union charge a fee for an account yet. But it's really more the fact that they can help you begin getting those beginning stages of, okay, this person been faithfully bringing in their money. They've been depositing, whether your paycheck is $25. Like, credit unions highly value any level of direct deposit you give them, even if it's $5. They consider that like, oh, they're committed to us because they at least give us this in a direct deposit. We'll give them we'll start them off with a 500 credit card, and then they'll tell you typically, okay, 500. We're gonna start you with 500 now. Do that for 6 months, and then come back, which most people won't do that. They have more standard procedures and they want to see an aggressive thing, but they're doing it based off, they're looking at your behavior less your credit score, because they have the ability to make that decision around it.
Yeah, that's amazing, especially when people actually start accessing and actually have conversation with their bankers to know and figure out what's going on for them. To your point, even at the end there, when that person used the EIL to get the business loan going, to get all that rolling, at the end of the day, it's going to undercut them because that's going to cut down on their Social Security in the end as well, and their Medicare or Medicaid, whichever that one is that we pay for. But ultimately, it's a problem that you find all the way around. Like, we're trying to skip over these things, but these things can actually help us. When you made that comment about that $600 paycheck, because we've all kind of been there, made a certain amount of money, and we're just trying to see what we can do. I remember my aunt used to always, she would recommend that I go to the paycheck cashing store because that's all she ever done. And something about it kind of like rang wrong. It was a little bit odd, and I was like, nah, I don't want to do that. So that's what I actually ended up staying with Bank of America since the beginning, because it didn't make sense that I was paying somebody to cash my own check on top of the check that already had taxes taken out of it. It was just a whole lot of, it was a lot of money going away for me for no reason at all. So I've learned very quickly that scheme, was not going to work for me.
You don't want your money now?
Oh no, I didn't need it. Like, the way she made it seem like you need it now, like you need to pay more money.
That's what they say. That's what they say. You need it now.
I could wait. You're like, oh, why don't you cash it tomorrow at the paycheck thing? And she encouraged my cousins to do that. So they fell into that rut of going to the paycheck cashing store. It became almost like a generational thing. Like, she literally taught her kids to do the same thing. So you end up losing a lot of money. Just that example that you brought out, that $600 at 10%, which is true, that fee of $60 per paycheck could end up being over $1,500 in a year, right? And I'm just doing some weird math because I'm a nerd like that. I love to do that. Even if you're invested $100 for 40 years at 8% in historical average in an index ETF, just not doing anything at all, nothing too complex, you'd have over $300,000. Which is extremely significant. That's all fees. You're basically paying for somebody else to have, wealth instead of yourself. So you want to consider that and really reaching out to people like Jonathan, because he has the experience of being a banker, and he could probably tell you from the inside out, like, it's not that bad. Especially, you never told us, how did you actually get booted out of Bank of America to begin with?
College.
Tell us the truth.
Like overdraft fees, or what was it? I had a bad credit card with them.
That was I had the bad credit card, but what did they do? They come to, I went to SIU to start, and then they have the tables, welcome week. I signed up. He was like, I didn't even realize, pizza. Like, when I think about it now, I didn't even realize he gave me a credit card. It's just 2 cards came in the mail, and I was like,
you didn't know what you signed up for.
He was signing up. He was like, I need this shirt. I need this frisbee.
Yeah. And then when I went into the bank, they was like, oh, this is your debit card and this is your credit card. I was like, card. Like, for what? I was like, when did I sign up for that? When did that happen? Obviously, back then in 2004, things were a lot different from the credit card underwriting, which people got in trouble for that situation. But I ended up using it because I had tickets. A college student, I was thinking I knew how to do everything. Realized I reached a point, even with $500, that didn't have the money to pay it back. So, and I drew money off it as cash. Like, I did everything wrong. And I mean,
thank you for being open and honest, because I was about that life too. It's like,
we're all about that life.
Like, cash advance,
cash threw everything around me.
Like, man, look, I ain't got it. So I understand the mindset of it, and what it took, but it was had money. And then I got blessed with a girl I was dating. I took care of her kids that year, and so I claimed her for that year. In what was it, 2007, 2008, or 2006, 2007, regardless, I got like $7,000 back. So I paid off everything on my credit report and started this course correcting. And to be honest, that move, when I talked to the girlfriend that suggested get a credit card, get me into banking, who's my now wife, I was in position I was getting offered for $500 limit from Capital One. I just wasn't answering. because I had paid my stuff off. So I was in a spot with the income to actually make movement. But like most, I'm like, I made a hard decision where I was like, you know what? It's $7,000. Let me go ahead and pay upwards of $2,000 of everything off my credit report. I was like, at least I know I don't owe nobody. And I mean, I just paid everything. But the thing that people don't know when going back to the banking conversation is, again, what can the bank do for you is every bank can do something in terms of, I mean, you may lose a job. Stuff might get tight. Your options for when that happens and life gets tight and maybe you made a misstep are better at a credit union. So in the sense of, like, I've seen over and over again where people might have their car loan at a credit union, they got a personal loan, they got a credit card, so they loaded up with debt. And so something happens to the car or something emergency happens, they got $1,000 they got to pay. Well, obviously they don't have any savings. What do? They didn't walk in and they explain their situation. I pick up the phone. I'm talking to the financial coaching section of the credit union. They was like, oh, well, we could put her in our program that will take away those monthly payments for about 3, 4, 6 months. So her credit's not impacted. She can pay this thing and then she can actually start to get herself ahead. A bank's not going to do that for you. They may give you a little bit of interest back. They may, like my wife, she was able to get a hardship where they lowered her interest rate to like 3% on her Amex so she could pay it off in a year, and they locked down the card. That was a great benefit for her. But to lock down all your loans to free up that cash so you can go take care of the emergency and then you can start back, you're not going to get that from a bank. You just transparently, you're not. And that's where the community aspect, that's where the credit union, that's where they thrive. But no, that's something you hear about in the news, and you wouldn't even hear about it if you walked in, because most of the people that's sitting across that desk from you are living paycheck to paycheck. They don't even know what all their bank can do.
Yeah, he's on mute now. So we
I
back.
would let y'all. I wanted to pause and let y'all.
No, it's all.
He wanted us to reflect as the time that his payment didn't come through for his Xfinity. So everybody's Xfinity ain't paid up right now.
Just piled up right now. Jonathan, you do have a Facebook group that you manage, Money Talks. Can you speak a little bit about that?
So part of that, just kind of knowing your options, was I'm letting people know. Yeah, I talk about a lot of oh, the Fed raised rates or the stock market did this, but I really more say, hey, this is what it means for you. This is the decision you need to be making right now. So 2 years ago, when we were at low interest rates or what have you, and we were starting to come out of it, the whole purpose was, even if you're in fear about buying a home, but you qualify and you actually could take on the responsibility, this was your greatest opportunity to buy a home right now. And people can talk about, oh, well, you got a whole lot of people that, they got a 2% rate and a $400,000 home that's now $600,000. They were like, oh, couldn't buy this home now. Well, yeah, but you didn't buy then. You bought at a good investment opportunity. I don't want to hear that you couldn't buy your home now. You're right, I couldn't, but I didn't buy my home right now. I bought my home when I was prepared while the interest rate was low. And so, yeah, that was my goal, and I'm able to benefit from it. But things like that, knowing what's going on in the car market, if you can hold out, or these are ways you can maneuver this. If you have to make this decision, do it this way. And so the biggest thing that I try to use the group for is understanding that, again, you might hear a video, you might watch a video of, oh man, you could buy a car, or, oh, I'm upside down, I'm just screwed. Well, you're not just screwed if you need a car or you're in a bad situation. There are options. They may not be the options because of what your situation dictates. So you may not have the options like me where I can just go get the car I want and I just choose not to get the car. You may have an option of whatever car you have, you might take what you view as a lesser than car. So if you was in an SUV, I might be saying, hey, you want to get out of this debt, you want to get out from under this this oh man, I can't think of the term, but basically you owe more than the car is worth.
Underwater,
yeah, you to get out from underwater. Thank you. There are options. Yeah, you could sell the car, get a personal loan. You could try to refinance. You could try to trade it in and get something else. But you also can look at the market and be like, okay, what are they actually really pushing right now? And I'm not one that I'm just haphazardly giving things, but I'm saying you could, for a season, for a couple of years, you could lease. It may not be mathematically the best situation for me because I have the money to pay for it. I'm like, I'll be wasting money. When you're underwater on a car, they take that car, if you can fit the terms of the lease, like don't get nothing where it's ostentatious where you're like, oh man, I can't deal with this mileage or anything, but you don't have no money. You move from a truck, you go to a more dependable car to allow yourself time. And I'm saying a dependable car because now you can get into that 350, 400 range of a note, pay that, save extra for the next couple of years. And then when you get ready or when the lease is up, turn the car back in. You're underwater, it's paid off. You didn't pay it. You might have paid a portion somewhere in there. But now you basically reset your situation like, okay, now what car can I get that fits my budget that's not more than 50% of my income? What can I buy? And think of that car like, okay, let me buy something that after I pay this thing off, if I need to get a note, I can keep for another 5-6 years to really open up my opportunity with my money. And then get a different car after you've done the work of getting yourself set. But those are the type of things in the group.
How long have you been managing the group?
Since 2017. So yeah, it's about 1,500 on there. What is it, about 1,600 on YouTube, 13, almost 1,400 on TikTok. But the group is definitely my just passion because people do share things. They share what they're finding, what their experience is. But that's hard because I know people oftentimes you just feel embarrassed. You feel like everybody's got on together, but I'm like, dude, as great as the economy is and as great as our world is, only 92% or only 8% of the 326 million people that will live in the US are millionaires. That's up from the 80s, from 500,000 to 22 million, but 92% of people are not millionaires. They may be doing well, but they ain't got money like you think they do. And that's the problem. You're thinking people are doing better and they not being fully transparent. And so you're making decisions, and all these decisions that you have, they require more decisions within them. You know what I mean? If you're buying a home, it's not just, do I have the down payment and can I get the closing costs? Well, you got to live there. And then second, can you take care of the maintenance that have it? Otherwise, you're going to lose on your investment.
Yeah, I think for bringing that up, because I think part of what you're doing with the Facebook group is probably the most impactful, because people need that space where you could actually have a community of people they could talk and share with. And you're right, a lot of people don't want to do it. They're too afraid to even mention that, hey, I'm struggling with my payments, or I have this payment, or I even have student loans. I have friends that never talk about student loans. It makes me know that they have student loans. I know you have it. I know you, because you try to avoid it all the time. Like, you never bring it up, like, unless you're not paying it, that's for sure. And that's also something you don't want to bring up. So there's always this these layers that we need to peel back from each other and just allow us to really have the space to say, you know what, we don't got it together. We have, the credit card debt. We have the home debt. We have the car payment, and we're working it through. And I commend you for having that kind of space and holding it down for it since 2017, before personal finance became entrepreneurship on social media. And when it was actually about the people, about helping people, about like really pushing people to the next level. and understanding where they're coming from. And I do hope that the more and more people kind of like watch you, because a lot of times too, they're waiting until you stop doing it. They're like, haha, see, I don't have to explain myself anymore. But the more and more, they're probably going to get to that point where they're like, you know what, time for me to share that, hey, I'm struggling with this, that, and the third. I had one of my best friends way back in middle school hit me up recently. Like, we haven't talked in years. Not like I don't like me and people from the way back. We kind of know each other at that level. Like, you don't have to talk every day. But he is years later. He's like, yo, man, I'm struggling with my money. I'm like, you never said anything for years, brother. You could have told me, and I could have helped you out. I even guided you throughout this entire process. But because everybody was so kind of afraid of looking at their own dollars, that it became this thing that this boogeyman that we don't talk about. People don't even look at their own bank statements or their checking and savings. They don't even look at that. They're like, I don't want to mess up my day. I don't want to ruin my vibe. not my vibe. Not today.
No, I mean, you're right. Like, my goal for that whole thing was, I had a mom, like, truth be told, I found out probably a couple of years ago as I've been learning about my mom in her 30s and learning the decisions, because I'm at that stage in life. Like, how did you manage with kids? How did you manage? Life wasn't hard to you. And I'm like, you didn't even have as much money as I got. So she's like, you know what I mean? The marriage and all these different things. But the big thing that really stood out to me with my mom that I figured out was she got a lot of bad advice from people she trusted that was in the business. And I'm not a person that usually gets upset or gets mad, but I'm like, my mom lost her house. There's a person who, her mom, the first house we lived in, gave her a house that was paid for. Somewhere in the mix, she got a mortgage on that house. We sold that one, and then we moved to a bigger house, which is normal. But my mom, listening to other people refinance the house we were in 3 times, 30 years. For what? You know what I mean? And I'm sitting there looking at the people that gave you this advice. My only question to them is, I know how much you possibly could have made off that refinance. Was it worth it for my mom? This is somebody you go to church with, close friend. I mean, you had to cook out with, everything. Was it worth it for her to lose her house? And you're not even doing that well in life. You know, so that's the part that I'm like, yeah, you're right. Is it tiring sometimes to come up with the post and keep them engaged and all that? But if somebody doesn't have anybody that they like, man, I know this is right. You know what I mean? I know this is truthful. Like, when COVID brought down the interest rates and all that, all my close friends that had houses, I was doing mortgages at the time. I'm going hard on them because I'm like, dude, you're never going to get a 2.5. Like, you're at a 6. Like, why is this? Why am I having to be on the phone with you for an hour and a half? Why am I having
the entire hour and a half? You're like,
yeah,
a long time, man. It's like it's 6 to 2.
You try to make matters work. I'm like, dog, you're never going to get an opportunity to make the biggest line item on your budget less and really move the needle to actually owning the home when you can remember it. You know what I mean?
Hey, man, they're looking at you like you work for Bank of America. That's what they thought in the back of their mind.
At that time, I was working for a mortgage company.
Third eye, man. You work for Bank of America. Watch them.
But I was like, when have we ever had 2%, 2.5? Like, you got people, I'm like, and you had a house. And I'm like, you were trying to look for that extra thing. So I realized, I'm like, there's something you thought of, but I'm like, dude, we're not talking about a couple $100. We're talking about 7 to 8 to 10 years off your mortgage. We're talking about, at the same time, close to $7 to $1,000, anywhere on average from $7 to $1,000 a month you're saving. For what? All because you didn't, you know what I'm saying, you didn't want to do it. And I'm pulling teeth. Like, I had a kid during this time. I was in the hospital with my kid trying to talk people into, dude, refinance your house. Now, when they call me, they're like, man, that was the best decision. I'm like, yeah, but you didn't want to.
You made it hard for me.
Yeah, you made it hard. And I'm like,
you give me stress.
I'm like, I don't even care if you do it with me. You know what I mean? I'm just trying to make sure.
I'll be salty, man. I'll be salty because they don't even like. I like when people are doing well. Like, you give them good advice, they end up taking it, and they do well. But they don't even just go on my page and say, "Hey, man, thanks for helping me." Just say that, like, just tell somebody that I actually did you a favor in life, like it makes it hard to leave a review. I don't know, man. It's a little much.
I'm like, dude, you don't understand. Like, you're planning on working, so now most of them, you're talking about you're 40. By the time you're 51, 52, when the average millionaire crosses that threshold, your house will be paid for. You're not even 60 yet. You're not even reaching the peak earning years. But even without that, your kid's going to college. If you didn't save for college, guess what? Now you don't have a mortgage payment. You have a little bit ability to help them. That may or may not be the decision, but you have another option to help them get ahead. But the whole point is, like, it was really pulling teeth. I'm like, you get an opportunity to save on your mortgage. Like, but my wife was the same way. When I was working at the credit union, the rates first fell in 2019. The credit union sent a mass organization announcement like, hey, you get an extra full percent off whatever rate we lock you in. I'm like, well, no, I didn't know that. They was like, yeah, and if you refinance, you don't have to pay anything because you're an employee. And so when I looked at what we had, she had actually bought the house we were in as an FHA. So, put the 3% down, whatever. So I looked at the math. I'm like, we'll save $200. We move it to a 15-year, and the rate is a 2.72. For me, it was a no-brainer. For her, it was, well, this was my first home. I bought it. You know what I mean? Now it's actually shit. I'm like, well, dear, we're married.
Irrelevant. It was an irrelevant statement. You're like, this is irrelevant. Like, when the colors of the house were yellow and the backyard was green, you're like, what's going on?
That's how it is. But now when we look up, that same home, it's rented. It's it's making the same amount for our current mortgage. But the bigger picture is, I have a 2.5-year-old. By the time she's 12, the house is paid for. If we kept going on if we didn't do nothing different. But these are decisions that people don't even know. Again, the options of what's going on and how it creates opportunity for you and your situation. And that's where a lot of people, you get stuck. A lot of people don't know, like you were talking about, I think earlier, this is one of the best times to invest in the stock market because they're coming out of recession, or whether they want to dictate a recession or not. They're coming out of recessionary time, and you're already starting to see the consistent growth of the bull market. But historically, whenever there's been a dip or downturn, the recession usually have its highest levels right after that that next year to 18 months. This is the time to do that. Even if this is your first time investing, well, you can cover a lot of ground with the growth.
There's opportunity, options, and also taking action. I think that's the entirety of this conversation has been, is like, it's available for us to do things, to just get educated and get in position. Because a lot of people too, what they do is like they wait until later for some miraculous thing to happen. But you have to be prepared. So this last since 2020 to 2023, we saw people that was like always behind on the 8 ball, right? Behind on the idea of just, hey, deciding, do they refinance, do they not? Behind on, do they invest or do they not? People were making oodles of cash throughout from 2020 to the peak of like maybe late 2021. People made nearly like 140% off the market or something. Just a regular random investments. On top of that, there was a downturn of 20%, and people was like, I'm going to pull all my money back. Then for some reason, at the beginning of this year, we scored right back up again, and damn near like 15%. Like, it's instead of working backwards and following the news, start trying to work ahead of the curve and figure out what happens next, what comes next. To your point, people will be better off paying off their homes, especially as their kids go off in college. Why? Because your kid's going to come back around and say, hey, please, Dad, please give me money, give me support. And you want to be in a position where you can help if you have that loose cash available to do so.
If you have that, but truth be told, that's a gift.
Yeah, it is.
Yeah, like your main, like my main goal is, I didn't want to be a burden to my kid. I didn't want them to be like, oh, I didn't put you through school. You making 60, 75. That's more money than I ever made. Yeah, I need you to throw me a 1,000, 1,500. I'm like, well, I got to get my life going. No,
I'm
if
gonna need you to
anything,
step up. Like I'm gonna need
yeah,
you to step up while you're in college. Send me that
like,
$500 per month.
hey, I was paying for my mortgage when I was in undergrad. I'm like, dude, I gotta move out. Like, it's fiscally, beneficial for me to do that. And I don't begrudge my opportunity to do that, but it's all the things of you have to take care of yourself first. You have to take care of your family first. And I think you mentioned earlier, you were talking about the student loan. I get it. At 2016, I graduated with my master's, my MBA. I had 150, 120, 150 in student loan debt. I got 150 in student loan debt, but my net worth is 800. It is not all in real estate equity. It's probably 50-50. Money, cash, and real estate. But it's really the thing of when I got out and I saw the 6 figures of student loan debt, I did say, how am I going to actually pay this? Have a have a wife that wants a kid and all that. And the fact is, the income based plan was important. You know what I mean? No, we don't have car loans. No, we don't have credit card debt. Yeah, we have mortgage loan. I have that. I'm what, 7? Well, I got 17 years left of the student loan thing, and depending on how things go, but investing in an index fund and S&P 500. That's what I did in 2016 because I realized, I believe, after looking in the bank and talking to people, and I'm like, well, you always hear, hey, if you pay your mortgage and then invest, you'll make more. Well, if the math is really true, this should work out. So I believe the math, and I invested based off the math theory of, okay, if the thing gets normal 10%, I should be up. Did I know I was going to have that same 150 in 5 years invested? No. But that changes my conversation about this student loan thing of, oh, I'll never get ahead of it, to now it's a question of when do I want to pay it off? That because I have the opportunity to pay it off and move on. It's just when. It changes everything. And my life can still move on. But those are things that people can do, especially right now with the fears of those payments starting. You need to be contacting your servicer. You need to be trying to figure out what your student loan payment is going to be. And you need to be including everybody that you provide financial support, your mother, your kid, your cousin, whoever you're providing financial support, that impacts what you have to pay. They're taking that into consideration when what you have to pay for your student loan. And then with Biden's extra benefit of is no longer 10% of your disposable income that they're calculating 5%, that makes it a little bit more manageable. And then you can start to think about, okay, I got this payment in place, it's fixed. Right now, they say if you had a plan before COVID, it's probably going to carry to 24, but check your servicer if you're watching this. Do your due diligence on that part just to confirm. But after that, now you can think, okay, if my payment is 125 and that's what I got to pay for a year, okay, cool. Now you can think about, okay, can I afford a home? Because now I can walk in and instead of the bank taking 5% of my total student loan balance, which is an exorbitant payment, they can take the payment that I actually have to pay and then I'll qualify. And so, yeah, you can step your way into this stuff.
Ooh, dropping all types of information. I'm not
That
gonna
was
call it
good,
gems.
yeah.
I'm not gonna call it gems because it's messed up. It's a lot of information. I think we should respect it as information because we have to get to a point where we encourage people to really sit with that for a very long time and try to understand it as much as possible, because there are ways to really get ahead of your financial situation if you take action. You reach out. You definitely need to contact, people like Jonathan with his platform, or even get into that community and see other people like you who are also, dealing with their money issues. We all are. I am. Alainta is. Lovely is. We talk about it all the time. So it's not something you shy away from. It's something you get into and you sit with it for a long time, because it's not going to be a shortcut to this. It's going to take time. So when Jonathan talked about the years, it takes years. But don't be afraid of the years. The years just going to come. They're going to melt away. Like we went through half of 2023. Half. Like I don't remember what happened the first part of 2023. It's going to blur away. But you want to be in a position where you can make better decisions for yourself and improve, daily monthly or even annually as you go through this process. So at least that's all for me. You know, everybody know me already, the neighborhood finance guy. If I'm not being toxic on Twitter, I'm also very friendly online and other spaces. I do have a website that nobody reads, but it's cool. I'm not gonna hate on y'all when I get rich, though. You know,
Go check out his website.
petty,
Please
petty.
go.
I mean,
Please,
petty as
y'all,
hell.
check out the website.
I mean,
please.
petty as hell. I see the 100 views. I know I got 100 views every month from a few people. I know who y'all are. Y'all
Somebody is reading it. 100 somebody is reading it.
They once. Everybody else sucks.
Well, Jonathan, thank you so much for being on our show. It was a wealth found of knowledge and just information, just your experience and your story sharing with us. But before we wrap it up, where can we, or anyone, where can they find you?
Yeah, like neighborhood finance guy said, you can search Money Talks on Facebook. That's a free Facebook group. There's a paid community version. We go a little bit deeper, but that's really you saying I'm really serious about making moves. I think it's about $15 a month or something like that. You can cancel anytime. That's not a big deal. But also jthomassolutions@outlook.com. Email questions. If you're trying to meet. J Thomas Solutions on IG, on TikTok, and Money Talks with Jonathan on YouTube. And if you haven't already, if you liked anything or found anything of value, please leave a review. Please leave 5-star. Leave a positive review. Don't leave question. If you have questions like that, inbox them and ask them.
Don't leave hate messages. Don't leave hate messages.
Please don't do it.
Questions.
We're all petty on this podcast. Don't do it. Well, thank you again for coming on. Like you said, make sure you check out his Facebook group, which is Money Talks. Is a free community, and this is where it starts. If you're trying to find community, if you're trying to expand your community, then check out the Facebook group with Jonathan with Money Talk. This is a great opportunity to reach out to others, to just read information. I'm like one of those people. I scroll, I look, I read. So it's a good opportunity to do so. Once again, thank you, Jonathan. And I am Alainta Alcin. You can find me on YouTube streets as well as IG. Thanks for listening. TFG, we're out.
Thank you for listening to the Financial Griot podcast, powered by the Wealth Builders Collective.